All right, my fellow traders, we are in chapter 4 of the trader's mindset. We are talking about destructive emotions. We're going to wrap up that section. And again, this is a little bit, I have added something to this. The core presentation is basically the same, but, I have added some things back to it or added some things to it. All right, so just to review what we talked about before, in trading, almost every emotion, well, I can say every emotion, I don't even have to say almost, every emotion can have a positive or negative impact. Negative emotions that end up controlling a trader's mind are disastrous, but negative emotions that are used to strengthen the mind and become a better trader are productive. Positive emotions can motivate and energize a trader, but when they become too large a part of the brain's feelings or a trader's feelings, they can really hurt performance. Traders need to work very hard to balance out all of their emotions in order to become successful, well-rounded traders. Okay, so everything that I'm sharing with you is the real deal. I don't know if anybody else shares things like this. I do get pushback sometimes from people, but the bottom line is, if you weren't in a position that you needed to learn, you wouldn't be listening to me. Okay, so the mere fact that you're listening tells me that you don't have it figured out. And I'm trying to help you figure out what's going on. This is what's happening. This is 100% what is happening to you in terms of your emotions. So last week, we talked about fear and how our emotions can be our worst enemy. So addressing our feelings and emotions, especially at the end of the day, should be the primary focus of all day traders. We can't focus on it while it's happening. We need to document it. We need to notate it, but we can't dwell on it. There's nothing we can do during the day. Everything is done in the afternoon. So you as a trader know when your feelings or emotions are affecting you in a trade. I know when I'm getting emotional. You know when you're getting emotional. When you get angry, the hairs on the back of your neck start to stick up. You get hot. Your head gets hot. There are things that tell you how you're feeling or gives indicators as to what emotions you're feeling. So you're in tune with that already, and you know that. So you should know when it's starting to affect your trade. So we talked about last week the three most powerful and destructive emotions in trading: fear, greed, and hope. Now this year I'm adding a new that's going to make it 4. Regret. Okay, regret is another very powerful emotion. And I'm throwing this in the mix. So these feelings are the direct result of these emotions: anger, depression, desperation, anxiety, revengeful, shame, guilt. All of these are direct results of these emotions. And this is just some. I know there may be other feelings or maybe other things that you can describe as to how you feel. But, these are kind of the main ones. So, our minds are hardwired with fear. Okay, fear is that reflex that keeps us alive and strong. When we're, running from animals or, engaging the enemy, that the fear is what keeps us on our toes. But when fear overpowers your calm, analytic mind that you need to have in day trading, the mechanism that's meant to secure your survival turns in the main reason why you don't make any money and why you fail. Okay, if we come in every day and we're just focused and we're scared that we're gonna lose, we're gonna lose. We're gonna bring that emotion and that result, into reality, because that's where all of our energy is going. So today we're going to talk about greed. Well, the rest of them. But greed is another dangerous emotion. Fear, although detrimental, it won't make you lose big for the most part. Fear will keep you out of trades, and it'll keep you from doing the things that you need to do in order to make money. Okay, greed can destroy you. Greed is what keeps you in trades longer than you should. Greed is what makes you double up your position size, when you shouldn't. It's, it can destroy you, and very, very quickly. But greed can lead to excessiveness and inconsistency. Your greed can put you in some pretty bad trading situations. I typically don't leave trades on for greed, but I do leave some on just because I'm angry. Okay, it's not for greed and trying to make as much money as I can. That's not what I'm doing. I think I'm over that. But some people, it can happen in many different ways. So if you're greedy and you just want more and more and more, this is what can happen. Okay, in the movie Wall Street, Gordon Gekko argues greed is good. Now I know everybody in here has seen the movie Wall Street. But greed can motivate you to strive for perfection and keep you persisting in the face of adversity. But it has to be focused. It has to be focused on that. If not, you're going to deal with the downside greed has. It's often said that the markets are driven by fear and greed, and it is. Most of us have an inherent desire for wealth and all the advantages that money can buy. We take trades and believe that our trades will allow us to achieve our financial goals. When the price starts going away from us, we fear losing our money and we close the trade, often too early and at a loss. When the market turns around, it actually gives us a good trade. The dynamics of greed drive the dynamics of the market. Well, fear and greed. I should put fear and greed there. Because fear will create a sell-off. Greed can create buying frenzies. So greed can cause three main downfalls. The first can occur when you're in a good trade and you exit with a well-planned plan profit. You get in, you have this area where you want to take profit, and you take profit, and everything is laid out. So good and well planned are the important terms. You suggest that you've been prudent and patient. You've done everything you need to do to plan out your trade. But now you notice that the stock price has blown through your final target, and it keeps going up if you're long. So you just jump back in trying to follow the run up, get as much as you can out of it. You jump in, and then the next candle just falls off the face of the earth. And it does it really quickly, and you're not ready to deal with that. And so you stand there with that deer in the headlights look, watching it go against you. That's what happens. Because your greed did not allow you to be happy with what you made. And that was on a well-planned day trade or trading plan. So the second is when the trade goes against you, and now you hold. You're holding with the hope, and it, hope is an emotion, that the price will go back up. You're hoping that it goes back up because you don't want to take a loss and you want to make money. Okay? So you hold on, and you hold on. So the third is when traders experience a losing trade and decide to double down on the next trade. So let's say I took a loss for 300 shares, and then it turns around and it starts going my way. I'm mad. I want to get this money, so I double up my share size. That happens to a lot of people. And when you're wrong, you get hit twice. So they hope, in this mindset, you hope throwing more money at the problem will help turn your P&L positive. And we all know that doesn't work either. So some secondary issues you run into is overtrading. Okay, you're trying to maximize gains, trying to take every trade out there you can. And you don't have a distinct trade plan or how you're going to manage risk. And that falls into ignoring risk management. Okay, these are some secondary issues of greed. But greed is vital. If you didn't have some type of greed, you wouldn't be doing this. Okay? But greed has to be locked up and, contained. It should only be freed in the vigilant presence of leashes, restraints, and charged stun guns. You don't want greed to get out of control. In other words, when you're consistent, you're sticking to strict risk management systems, which you don't have to think about risk management. When you build your trade plan, your risk management system should be built into that plan. So that's not something separate you're looking for. It's already there. But if you do that, greed is always going to be there. Again, greed is what makes you want to make money. But it's just not running loose all inside of you. Now, that's not something that we want. So hope can be the most dangerous emotion for traders because it blinds them to risk and gives a false sense of confidence. All right, so we're moving into hope. Hope can be the most dangerous emotion for traders because hope helps you ignore your risk management. It helps you ignore. It's one of the tools that you will use to ignore your risk management when you take a trade. The traders acting on hope often add to losing positions, digging themselves deeper into holes they should have climbed out of quickly. Another problem with hope is that it is closely related to pride. People don't like admitting they're wrong, so they refuse to acknowledge the harm they're doing, by staying in a trade and watching it just keep go further and further against you. So you think about that. How many times do we sit and hope? I hope, we all hope that the stock goes to our target and we're able to take profit. We all have that hope. But that hope is grounded. It's grounded in the fact that we have a legit trading strategy, hopefully that you took the trade off of. And so the trade is based on a strategy, and all we're doing is hoping that the strategy plays itself out. I'm not talking about that kind of hope. Okay, I'm talking about blind hope. I'm talking about just throwing, closing your eyes and throwing dice. Not throwing dice, throwing darts at the wall, hoping it'll stick to the target, or hoping you hit a bullseye. That's kind of what it's like. You're hoping that you hit it. So we don't want to get into that. So the last one we're going to talk about today is regret. Now, regret is defined as a feeling of sadness or disappointment over something that happened already that you wished you were a part of. And when I talk about loss, I mean loss of a trade opportunity. I'm not talking about involves a loss of money. When you miss a big trade, a big move on a trade, okay, that regret can get caught up, and you can spend the whole week waddled in regret and not get any further. Okay, just because you missed a big trade opportunity, whatever. But it's only natural for a trader to regret taking on I think I said this wrong. It's only natural for a stock trader to regret taking on a losing trade or missing a winning trade. Okay? I was just saying it wrong. In my mind, I was thinking one thing and something else was trying to come out. But if you take a losing trade, sometimes you regret taking it. You're just like, look, I shouldn't have taken that trade. I wish I hadn't taken it. Like with me with Nvidia, when it broke out, I could say, man, damn, I should have left it alone. I hate I took that trade. Now I got 2 losing trades today. But that's not healthy. Sitting here regretting and putting too much emphasis on it is unhealthy. I can regret it, lock it up, and move on. And that's what we want to be able to do. But what is important as a trader is not to hyper focus on losing trades or missed opportunities. Not patting yourself on the back because you stayed out of a losing trade, or beat yourself up because your trade lost. You did everything right, but it just so happened to lose. But then another stock you had on watch, somebody else traded and made money on Okay, we can't worry about that. If you lose money on a trade, then you should simply evaluate what went wrong and move forward. That's where your reflection comes in. And the act of journaling, that's when all of that comes in. Other than the lessons that can be gained from evaluating each trade, there's really no point to spending any more time regretting the decision to enter the trade. If you took a risk and you just jumped in and it didn't work, don't spend the rest of the day regretting the fact that it didn't work and that you made a mistake. It's only detrimental to your trading. It's also human nature to feel regret when we miss out on an opportunity. Sometimes we can get really mad. We could be waiting for the market to make a move all day, and then we have to go off and do something real quick. We come back 15 or 30 minutes later, and the stock made the move. It made the move. So we can't be that way. If we miss a winning trade, then we've got to move on to the next potential trading opportunity. Okay, I think I talked about this morning. But I've got a quote here in a minute I'm going to share with you. When technical traders, and we're technical traders, guys, we're day traders, we trade the technicals. When technical traders allow regret to rule their thinking, that's when we chase trades in the hopes of still being able to make money on the position by entering it well above the trigger price. Here, when we chase, usually a chase starts with our regret for missing the initial entry. And then we bring in another destructive emotion, hope, and greed. Because we're hoping this trade works because of our greed. We want all this money. So, this is what we need to really stay away from. Whoops. All right, so there'll be times when your trades succeed. And there will be times when your trades fail. Wasting time worrying about the outcome of a single trade is pointless. Just take it one trade at a time. If it's successful, great. You're going to come back and you'll be ready to take the next trade. If it's not, yeah, it sucks. It's not a good feeling. But if you want to stay in this game, you're still going to have to come back and take the next trade. So why dwell on individual trades? It only breeds fear and regret going into the next trade. Does that make sense? I hope it makes sense. But you want to make sure that we come in and we're taking trades and we're not worrying about whether it's going to be a winner or a loser or anything like that. We're only worrying about whether we take the trade and we execute our trade plan perfectly. That's where the focus has to be. So we do have to understand the powers of fear, greed, hope, and regret, along with the dangers and the advantages of each. Know that self-discipline is key. In day trading, your primal emotions must be caught and confined, yet masterfully drawn upon. Lock them down, scrutinize them, and train them. I'm talking about you against you here. The quintessential human condition. If we're gonna be successful in this industry, it's us against ourselves. Making great money in day trading is all about mastering human nature. We've got to master it. So, any questions? Because we're gonna wrap this up, and I say this all the time: hold yourself accountable. One way to beat these destructive emotions is to hold yourself accountable, especially with a journal. Successful traders typically record all their transactions so they can study their charts. Were gains the product of their strategy, or was it just dumb luck? Did losses result from following the plan, or did they flow from breaking the rules? This is important because there's no replacement for adhering to a good system over the long run. So I'm going to leave you with this quote. If you can learn to create a state of mind that's not affected by the market behavior, the struggle will cease to exist. Alright, if you can learn to create a state of mind that's not affected by the market's behavior, the struggle will cease to exist. Alright, any questions or comments? I think it's Mark Douglas, I can't remember. Alright, no questions. Either I put everybody to sleep or you believe every word I say. Well, I'm gonna stop the recording then.